जीतेगा भाई जीतेगा, भारत माता की जय.
Well, Diwali is over, but another Choti Diwali will be celebrated today because India will be playing the semi-final match in Mumbai. And when there is history in making, well, what is India watching out for and what are we cheering for? Jeetega bhai jeetega, Bharat jeetega. Jeetega bhai jeetega,
भारत जीतेगा.
आवाज जोर से नहीं आ रही है आज. So शरद, जीतेगा भाई जीतेगा.
भारत जीतेगा.
क्यों जीतेगा?
अभी जो है रिवेंज लेने की बात है. 2019 it's the same repeat telecast we are having. That's India versus New Zealand, and this time the semi-final is here. So a lot of excitement is there.
So what are you guys doing here?
We haven't got the tickets yet. It's so difficult to source the tickets, and all over the place it's very hard to get, despite being just 15 minutes away from the stadium.
But what really matters is that doesn't matter whether you are in the stadium, you're outside the stadium, you are on the road or you are in a cinema hall. What really matters that from 2 o'clock onwards, what will India do? Watch the match. And what we will be doing in the ET Now newsroom today, only one line. Jeetega bhai jeetega.
India जीतेगा.
Jeetega bhai jeetega.
इंडिया जीतेगा.
Okay, now the entire newsroom, we'll show a newsroom right now. And come on guys, get up. We have to cheer for India. जीतेगा भाई जीतेगा.
इंडिया जीतेगा.
जीतेगा भाई जीतेगा.
इंडिया जीतेगा.
बैटिंग पहले कौन करेगा? What is a good run on this pitch?
Well, they have actually reduced the grass element to it, and if head to head, if you look at the numbers, it's slightly New Zealand is in the favor. 5-4, totally 9 matches they have played. But overall, if you look at this World Cup, 9 out of 9, India is winning at 18 points.
So Vamakshi had the ticket for India Pakistan, right? Vamakshi, this time.
So this time, unfortunately, I couldn't get it. It's very
2 o'clock the match is starting. You still have time.
I still hope, fingers crossed.
So this has been a multi-bagger investment. Talk about multi-bagger. One multi-bagger investment at the beginning of the tournament. If you actually bought a ticket for the semi-final, and all kind of numbers have been floating around. But I guess this is one of the quickest multi-bagger what we've seen in a matter of 45 days, 3 to 4x. So who says Avan and Isha multi-baggers are only found in the SME stock exchange and the small cap index? Well, in real life also. Jeetega bhai jeetega, India jeetega, and trust me, it's a multi-bagger in making if you really have that ticket right now. So that ticket right now perhaps is weight in gold.
Absolutely, and we're all bleeding blue right here in our studios in the newsroom. It is the Indian-led cricket team, incidentally, which has been unbeaten in the World Cup tournament so far. So fingers crossed today that winning streak continues, Anisha.
Fingers and toes, everything crossed together, because now all eyes actually are on November 19th, the final.
Yeah.
Will it be against South Africa, Australia? That's the verdict I want to look at today. But other than that, I think, and fingers crossed, that it should clearly be India today. It's Wankhede, the enthusiasm is high, the country is praying, and it's been a dream run for us in this series so far. Not only the batsmen, the bowlers are in full form, and the team clearly seems to be enjoying and having fun at playing those amazing series as well. Of course, Rohit Sharma has been doing his bit as the captain, and Virat Kohli, of course, has been that star performer as always. So just glued to the cricket match from 2 p.m. onwards. Don't care what the closing is going to be like today.
Absolutely, everyone is going to have their eyes glued to the screen, and of course you do have the high intensity adrenaline because it's going to be right here in Mumbai, as you said, in Wankhede. There's still time before the match, so let's try and get our hands on the tickets. That is going to be the one hope that everyone has today. So yep, looking at the mega clash later this afternoon. Alright, as much as we hate to, let's deviate, let's shift focus, let's talk about the global markets. And actually, it's been pretty upbeat momentum that you've seen. So you did have the S&P 500, which notched in a nice gain of nearly 2%. The Nasdaq popped up by about 2.5%. And it was the best day since the month of April for both those indices. The Dow Jones as well gained close to 490 points. So this was pretty positive in terms of the overall global sentiment, and what really aided that was the fact that the CPI print as well in the US came in a little bit lower than what was expected. So now you have the possibility of a rate hike slipping to a little bit less than 6% versus that estimate of about 14%. So with the US indices at near 2-month highs, you have the Russell 2000 index, which incidentally saw the best day in almost a year. So clearly it's strong momentum coming in from across the globe. And you've got close to a strong momentum on the inflation print. You've got the Asian markets as well, by the way, this morning, which are jumping on the back of that positive momentum, piggybacking on what the US markets have thrown up. So the Nikkei, the Kospi, the Hong Kong index, the Chinese markets, all comfortably in the green. You've got Japan's economic data as well. It's shrunk faster than expected, so that's some data coming in. But other than that, you've got the 10-year bond yield, which has dropped by about 17 basis points, and the dollar index, which is down almost 1%. So upbeat, Anisha, in terms of the kind of global handover.
Well, yes, the global handover is quite positive and it's having a rub-off impact on the GIFT Nifty as well, wherein the implied open suggests that there's going to be a 240-point gap up in 19,730 on the index when we start the trading session. Remember, for the last 3 weeks, we have been consolidating. The range has been from around 18,900 to 19,400, 500 thereabouts. And last week, it was all between 19,300 to 500. Seems like finally today we'll break out of the range, but the big question is, how long do we sustain? And from that Diwali rally, are we now going ahead with the Santa Claus rally at the end of the year? Because it does look like it's a sparkling year end that we have ahead of ourselves, buoyed by the global cues that Avan just talked about. Of course, HDFC Bank, ICICI Bank, Reliance and Infosys were a bit of a drag on Monday, but I think that's a completely different picture now. Over the last couple of days, we have seen a complete reversal in terms of the global trends that we have seen. And even if you look at from the recent lows, Nikunj, whether it's the Dow, whether it's the Nasdaq, whether it's Nifty, they've all rallied quite hard from the lows. In fact, Nasdaq is up 10% from the October lows.
See, I'm not at all surprised. I mean, just like you can sometimes count the tea leaves, the risk has returned. That is what we must realize. The decline in bond yield, the crack in crude, the market has managed to climb the wall of worry, and then in a sense, what you've seen is that the seasonality which has kicked in. Now, whether it is the year-end rally or the Santa coming early or Diwali getting extended, our channel view has been that you had to prepare your portfolio for a last hurrah. And I think the last hurrah is not over. Now, we can endlessly get into small caps, mid cap, valuations, but the bottom line here is that globally, there seems to be a strong bullish undercurrent, and we must respect that undercurrent. Why is that undercurrent evident? Yields have reversed. Crude is down, inflation is manageable, and dollar index, which is again an indicator of the macro terrain, I think is favorable. Then you've got in India a market where everyone is worried about the recent rally in small and mid cap stocks. Nobody is ready to commit more. There is so much of disbelief that despite FI selling, the market actually is holding on. So I think the last hurrah in the market is not done yet. Now, in next couple of days, we'll know that this is going to be a new high, or the markets may just go to a new high and may just retreat from there. Bear in mind that in the month of November and now till in the run up till December, you don't have too much calendar event. So a lot of news may not be thrown at the market. So if a lot of news will not be thrown at the market and the earnings season is almost done, then market upside would be a function of global macros, sentiment, momentum, flows and liquidity. On all that account, you take the liquidity part aside on the FI front, I guess by and large market I think are in a good steady state. Now the small cap index has already hit a new high, and if this current momentum in the global market continues, I will not be surprised that not only we will make a new high before the year ends, I think we could be convincingly before a new high. See, large cap stocks have not rallied. And it's very easy for me to say, okay, law of gravity has to kick in, let's respect Sir Isaac Newton. We can talk about all that. But Newton also told us that if a body is in momentum, it will stay in that momentum until and unless an external force is applied. So rather than looking at Newton's law of gravity, I would look at more laws of Newton, which say that when a steady state of the matter changes because of momentum, it remains in momentum till the time an external force is not applied. And that external force here could be global, macro, geopolitical, or something which is not visible right now. So if global cues are strong, if flows are decent, if market are not positioned for any year-end rally, that is the time then bulls surprise you.
Yeah, looks like it because right now, if you look at the macro data, it's very supportive. You got the US CPI, which has trended down from those levels of around 9% that we saw earlier. It's now down to 3.2% and pretty much flat on a month-on-month basis, much lower than what Street expected. And back home as well, inflation hasn't been that sticky at all. The Indian WPI and CPI data also kind of depicted that there is a bit of cool off, and that's why the probability of rate hike now is down to sub 4% in the month of December. Earlier, the market was penciling in there's going to be a rate hike in December. That's really now cut down, and that is no longer the street consensus. Less than 4% people believe there could be rate hike. In fact, the discussion has now moved to rate cut, and now that probability is being talked about at the mid of next year itself rather than the end of next year, and that's the reason you saw that monster rally of almost 500 points. And but Winnie is now ready with us to talk to us about what the global commentary has been regarding all of these data points that we have got. Winnie.
Absolutely. Good morning. Before I come to the US data points, let's talk about Bank of England. We have commentary coming in from Chief Economist Bill, who's highlighting that, in terms of the data of the pay as well as inflation in the service sector are still quite stubbornly high, and they're warning that there is a risk that there could be a price increase and will be more persistent than the policymakers are expecting. So surely keeping an eye out on that. Bill furthermore is highlighting that the news of the key underlying inflation signals are being watched by the Bank of England as well, and as of now they're not so good. So yes, keeping a close eye on that and where that is headed. Moving on, we have commentary that is coming from Federal Reserve Bank's Richmond president, that is Birkin, who's highlighting that he's not convinced with the inflation data point that is coming in, that it is on the clear path towards the central bank's 2% target, and this is despite the real progress that is curbing the price pressure in the recent months. But despite that, he's a bit cautious on this stance, so let's keep an eye on that. European Central Bank commentary coming in is that they're confident of inflation will return towards a 2% target by 2025 after raising the interest rates at a record pace. That's the word coming in from Bank of France's governor, so keeping an eye on that as well. And lastly, we have Peter Schiff, who tweeted in terms of Fed's inflation, Fed as well as the inflation's war, as well as what he's highlighting that Fed cannot win this inflation war, as any indication of a victory will produce a sharp decline in the dollar exchange rate as of now. And they believe that the Fed ever declares a war against inflation, the dollar will collapse, and weakening dollar will put a renewed upward pressure on the producer as well as the consumer prices as well. So let's keep an eye out on these commentaries this morning.
Thanks very much, Vinny, for giving us that roundup. Let's get a move on and check in as to what our chartists make of the market setup. And Naresh Mirani and Kunal Bothra joining in as always. Kunal, no Indian clothes, no jersey for you today, but I bet at 2 o'clock maybe you'll be donning it.
तैयार हो क्या ये?
You were saying that last weekend.
Have you managed to get the match tickets?
No,
You didn't try.
I didn't try.
Why?
Wankhede, Mumbai.
You were ready to go to Ahmedabad and you are not going. You went to Ahmedabad, right? Or you wanted to go to
I
Ahmedabad?
wanted to go to Ahmedabad, but I didn't get the ticket.
You trying tickets for India, Pakistan, not for semi-final.
Yeah,
Nikunj, maybe you can set up a large screen, order some amazing food, get the setup going in the office. We have so many TVs here after all.
That is what I'm planning to do.
Now on air.
But
he's
are
saying
you going
all
to be
this.
here or are you going to be at Wankhede?
I will be outside Wankhede. So, to enter Wankhede, you need tickets.
Okay.
Nothing stops me going outside Wankhede.
And at least get the feel and the vibe, because I'm sure today Gali mein I'm sure you'll get that feel of proper Bharat in India.
Yeah, I mean, Wankhede is not gully, but yeah.
Yeah, okay, but let's chat markets then. And US indices near 2-month highs. Kunal, what's that spelling for our markets? We had the Mahurat trading session. We had a Monday trading session where we held out around the 19,400 mark. What's in store?
Yeah, I think excellent setup from the global markets, and I think that's the biggest positive in terms of sentiments for the global markets. Risk on across many equities, which you've seen many of the indices. In fact, not just the US markets, but many of the other Asian markets as well as the European indices. They've confirmed breakouts for themselves of multi-month. Some of them are at multi-year highs for themselves. So I think that's an encouraging sign for the markets overall. And I believe that it was just a matter of time that Nifty would also surpass about that 19,500 mark. We had a touch and go moment, I think, 2 days back on the Mahurat session. But I think after today's hopeful breakout move about the 200 plus points for the SGX 50, we could be comfortably about the 90,500 mark. So I think now we should be looking out for 20,000 mark on the Nifty as a very near-term target.
Okay, 20,000 on the Nifty as a very near-term target as far as Nifty is concerned. But what about Bank Nifty, Naresh? Any sense that that could also participate, because that has been the key underperformer and a drag on the market right now?
So finally, we could see some participation coming in the large cap banking space. We've started seeing a good recovery across the mid cap and the small cap banking names. We are seeing new leadership even in the banking names. You have Axis Bank closer to previous highs. You have Federal Bank hitting a new all-time high. IndusInd Bank hitting a new 52-week high. It's just that HDFC and Kotak, which are almost 35-40% of the bank nifty, are not really making a move, and even ICICI Bank. So that's the problem. The three heavyweights are not moving up. But good indications that after such a recovery, we could be going towards that 45,000 mark on the bank nifty with some bit of help from Kotak, ICICI, and HDFC Bank. A little bit of a push and we can go there. Overall, the bias remains positive on the broader markets. Heavyweights still left to actually catch up in terms of momentum. So if we have even one or two heavyweights doing well, we could be testing the 20K and 45K mark.
All right, let's find out what the stock-specific strategies are. So, Kunal, you said that we had that big boost coming in from the US market. So, in light of that, what are your top recommendations?
So I'm betting on momentum plays. First one is one Canara Bank. We saw many of the PSU banking stocks yet again, I think on Monday, giving signs of breakout for themselves. Canara Bank was of course one of the leading ones. So would suggest a buy with a target of 440, stop loss to be kept at 390. And Sun TV is the other stock which is also confirmed a breakout in the short-term charts. The stock breaking past about 620 mark, which was the earlier resistance for Sun TV. So would suggest a buy with a target of 700, stop loss at 650.
Okay, let's find out what's on Naresh's radar. Naresh, what are you going for?
So first is a buy on Federal Bank, a clear-cut leader in the mid-cap, small-cap banking space. The stock has outperformed on various time frames. Did hit a new 52-week high and an all-time high yesterday. Good breakout done, good volumes, and a strong recovery in the last couple of weeks. Indicates this momentum could take it towards 170, stop loss at 147. Second is a buy on GAIL India, which after that breakout of 118.20 went up to 132. Tested at 118 mark and has started making a slow recovery. Looks like a retest is done and we are getting into a multi-year breakout of outperformance going forward. So a stop loss now at 122, target price of 140 in the short term.
Those are the top recommendations coming in from our charters, but let's welcome on board Somit as well to talk to us about which are the stocks which are going to be in focus today. And let's start with Manappuram. While the gold loan rate was a bit muted, the profitability improved quite a bit, and there was a big consensus beat coming in there. And now valuations is also something which is liked by the brokerage on the upside, right?
Well, yes, 10% beat on the PAT front, but if you remove that one-off related to the assignment transaction, then the PAT beat would be around 4%. It is still better than what its peer Muthoot Finance had reported. Now, like Muthoot Finance, the gold loan growth, as you were mentioning, was a bit muted, but if you see on the yield front, that has been a surprise as on the street. Now, Muthoot Finance yields had declined, but Manappuram Finance yields have increased by around 50 basis points, and what brokerages are saying that around 2/3 of the yield decline that happened in the fourth quarter has been completely recouped, and management intends to maintain their yield, but they are fine with the 8% growth on the gold loan side, but yields is their priority and they're going to maintain their yields going forward also. That is the commentary coming in from the management side. Now the Asirvad MFI, now that reported a strong loan growth, however the credit costs continue to remain elevated on that front, and valuations, as you were mentioning, is currently 60% lower compared to its peers, and the share of the non-gold loan AUM has also been increasing, and management intends to bring that to 50%. From 44% in Q1, it has already come down to has increased to around 47%, and it can further increase going forward, and management intends to bring this to 50%. So strong growth when it comes to the non-gold AUM, increase in yield and the gold front, and management intend to increase profitability going forward are the key positives coming in from Manappuram.
No, see, I think we think Manappuram and we think gold. But 47% is now coming from non-gold, and that because it's a new business, it will have a higher rate of growth. So now you're looking at a NBFC, which is gold plus non-gold. I mean, 50% non-gold, I think, is a very reasonable size. And the fact that you got access to so much of gold, you have a very differentiated, client base also. But the stock's cheap, and it amazes me when I looked at the valuation. Both, I mean, there are two metrics to look at: price to book. It's trading at, and I'm amazed, Somit, FY25 sub book, P 4 times. Return ratio is 21-22 times, and I wonder that why did the stock become so cheap? So purely looking at where they are, where the valuations are, non-AUM growth. I think if one is really looking for a contra value stock, I will not be surprised this one emerges as one.
Okay, that is the word coming in on Manappuram, but let's also put the spotlight then on the much talked about Tata Tech. It is the IPO that's coming out of the Tata Group stable after a very long time, opens on the 22nd of November, and it's an OFS, Samit.
Well, it's around after 20 years this IPO is coming around, and Tata Motors intends to sell around 9.9%. No, they have actually sold in past around 9.9% stake, and majority of the stake sale that is happening in this OFS is from Tata Motors. Now the valuation based on past transactions stands at around 26 times, and they have grown at a higher growth rate when compared to peers. But Anisha would be here to give us more details on Tata Tech, right?
Oh, well, yes, because the big debate that people are having is how is it different from the rest of the IT players and how it's different from Tata Elxsi, how does it compare with KPIT Tech. Now, in terms of the verticals, yes, the exposure is similar to the transportation vertical, but then there is aerospace as well, which is there in, Tata Tech, which is not there in the other companies as well. Even if you look at the revenue growth rate, that's higher in this company versus the rest of the peers as well. It's done, it actually does a lot more versus other companies. So right from a software testing, so product development to a manufacturing engineering and design engineering, all of that is done by Tata Tech as well. Of course, almost 30 to 40% of its revenue comes from the Tata house itself in terms of Tata Motors. So that's the differentiation factor as well. Because if you look at KPIT, they are, for instance, not present that much in, aerospace. Cyient is not there in automotive. So there are those small distinctions which are there. But if you look at the valuations as well of this company, stacks a bit lower than what the rest of the peers are trading at, because we have seen the valuation of these niche ER&D companies anywhere between 35 to as much as 70, 80 times. As far as Tata Tech is concerned, it seems to be valued a bit more attractively in the sense that it's around 26 times. But Nikunj, just the fact that, a new IPO is coming in from the house of Tata's, first in almost 2 decades, that itself is the exciting part. And of course, Tata Motors also gets to make a windfall out of this.
The benchmark valuation has been established by that private deal which was done. So I don't think the IPO is going to be way off, because the benchmark valuation was just done like a couple of weeks ago. Now, can Tata's manage the balance sheet of Tata Motors without this IPO? Of course they can. So then why are they listing? Well, the reason why they're listing is because this, in a sense, is one of those niche companies which has potential to really make it big, considering the kind of profile they are in. I think it's one of those issues where you actually will see this really could be the season listing of the year. Looking at the size, which is not like Magnus Opus or not very large or colossal, it's not going to be an issue where everybody will get IPO allocation. So if you just get lucky in terms of an IPO allocation, and looking at the benchmark of where the pricing has been done, and considering the Tatas are likely to leave a lot of money on the table, one would argue and say that this, if you get in the IPO market, you don't want to pay for that IPO pop, even if the listing is 50-60% higher. You want to just hold it. Let the Tatas do their magic. Let the company evolve. Then the right space, right brand, and the businesses which they are representing, they can really they can be really scaled up. This is not a typical IT service company, which is where you would say, okay, there is an AI disruption happening. This is an AI beneficiary. This is not a company which actually will be disrupting, because their business will get disrupted because of AI. They would be benefiting because of AI. This is the other way around. So these are companies where you say, okay, I will apply for the IPO. If I get lucky, I may just hold on to it.
Yeah, not just the listing pop, but perhaps the long-term value as well.
Yeah, absolutely. So that is something to closely eye. Thank you so much, Samit, for highlighting those stocks. The other big talking point today is going to be what has happened with respect to the MSCI announcing that rejig 9 stocks have been added to the global standard index. None have been deleted. Among that, Suzlon Energy, IndusInd Bank, 197 Communications, which is the parent company among Paytm, are among the 6 others that are part of the latest inclusions. Sriram Velayudan, who is the head of alternate research at IIFL Securities, joins in to discuss the same. And I just want to get in an overall view from you, just the fact that there have been no stocks that have been deleted from the standard index, and a lot of interesting names, if you will, have been added.
Hi, good morning. So MSCI made the announcement relating to November review early today morning India Standard Time. So as you rightly pointed out, so there aren't any deletions for the forthcoming review. So this purely works on the basis of the methodology that MSCI has put out. So basis that, we aren't seeing any deletions in this review. So in terms of additions, the standard index will see 9 additions. The highest of them in terms of impact being Tata Motors, DVR, which we are expecting inflows to the tune of $145-150 million, which is a big ADV of almost 13 days, followed by Macrotech and APL Apollo. So these again are high inflow additions in terms of ADV to the tune of almost 10 to 11 days. The other closely followed addition was rather is IndusInd Bank, wherein we have been following the foreign room for the last couple of quarters. Finally, the addition is going to happen in this review. The other additions are Polycab, Paytm, Tata Communications, and Suzlon Energy. Suzlon Energy is another high-profile addition. It has become relatively liquid lately, although the inflows are to the tune of $250 million, $240-250 million. The ADV impact is 5 days on. In terms of weight up, the significant names are Vedanta, Colgate, and Hindustan Aeronautics, wherein the ADV is to the tune of 1 to 1.5 days. Most of the weight downs are largely funding sell, and we expect the standard reval event to be a net inflow event for India to the tune of $1.2 to $1.25 billion, and the adjustments will take place on 30 November.
Any name which has come as a surprise for you, which you were not expecting should be included, that has got included despite free float and promoter holding?
No. So the list is largely in line with what we had anticipated. In fact, there were a couple of. There was one more name in our radar, Sundaram Finance. We will be rolling it over to the Fed review. Yeah, please.
A bit of a disappointment in terms of Shriram that it didn't get added, but the focus now shifts to the FTSE review, which is lined up on November 17th. Talk to us about what's your expectation in terms of the stock movement there, and which are the stocks that could get the highest amount of inflows/outflows?
Sure. So I would just like to correct what I mentioned was Sundaram Finance, not Shriram. So there wasn't any expectations relating to Shriram Finance in this review. So in case of FTSE will be announcing the results of its quarterly review on Friday, that is a day after tomorrow. So largely your June and December reviews pertain to IPOs and spin-off. We anticipate addition of Mankind Pharma into the All Cap and All World Index, and we have extrapolated inflows to the tune of $30 million. If in case Mankind Pharma gets added to the All World and All Cap Index.
Historically, Shriram, what really has been the lag in the lead effect of MSCI adjustments? Because the fact that this MSCI adjustment was coming, the market whispers, you may call it the Chinese whispers or the Indian whispers or the WhatsApp forwards, markets in a sense were anticipating that. So technically when the flows come in, do you think the net impact in the market will be less because the sellers know that new buyers would come in and they may be offloading what they actually, in a sense, warehoused? Such an important question.
Maybe we'll try and repatch the line with Sriram to get that answer as well, because of course that's the big point, right? How much impact will it have? Because we have been getting all of these reports and the probable, data as well. Is he back with us? Could we pose the question to him again? Okay, we'll try and reconnect the line with Sriram to get that answer. But of course, it's IndusInd, Suzlon, Persistent, APL Apollo. These are the stocks which are likely to get the highest amount of inflows. Let's do one thing. Let's try and take a small break on the show as we try to repatch that line with Sriram.
Thanks for staying on with us. This is The Market. We've got a pretty healthy handover from the US markets and banking on a steady open for our own markets. And you've got positive macros as well in terms of the CPI print overseas and back home. So let's find out what to make of the market. We've got Sanjeev Bhasin, who is joining in as always. Sanjeev, hi there. Good morning. Lots to chat about, but let's first up get in your take as to how you expect the overall market momentum to pan out, particularly on the back of this strong handover.
Yeah, good morning, Avan. So, firstly, my envy not being in Bombay with you and wearing the same T-shirt and cheering for India. That will be another icing on the cake. And behold, the icing on the cake is that we are going to open on a 200-point upswing. See, we've been missing the momentum for whatever reasons on the large caps, and I think today is the perfect occasion to catch the bears on the wrong side. I would say that this is just the starting. I had told you 19,700 is coming within a few days of Diwali. Now you write it down. 20,000 is here by the end of this month and roaring, because the mid cap index is where the real money is being made. Today, I would say that there will be follow-up buying on the back of an exceptional fall in bond yields, weaker US dollar, which has been boding for us for some time. And I think that this consolidation has played out rather well on the broader market, but it's about time the elephant started to dance.
Nothing stopping you from wearing the jersey still. You can don it in New Delhi as you are surrounded by smoke and pollution and smog, because I believe that the Delhi pollution is now in the severe category because rain is also eluding. But that aside, let's talk about good things, the market momentum then. And let's talk about the comeback of some of these large cap banks, because over the past few days, we've been interacting with a lot of experts and they're of the view that some of these banks which haven't participated, it is going to be the time for some of them to make a comeback. Valuations as well looking ripe. Your thoughts?
Exactly, Avan. If I could, bet something on, it would be the Bank Nifty. It got irrationally sold into below that 42,500 or 42,200. Now I think it is broken out on the technical chart above 44,000, and I can guarantee the Bank Nifty will hit a new high before the Nifty, because that was the first one which started the slide. And irrespective of when HDFC Bank wakes up from its slumber, I think ICICI, Axis, Kotak, all these will add flavor to an already bullish PNB and Can Bank and Bank of Baroda. So sum of parts, it means that large cap private banks actually could shift the pattern for the Nifty to move up, but Bank Nifty will be the outperformer.
Okay, Bank Nifty will be the outperformer, but talk to us about Manappuram as well. We were just discussing that stock, that the gold loan rate might be a bit muted, but look at that solid set on profitability, and the brokerages are calling it a re-rating candidate. Your view on Manappuram and even Muthoot for that matter?
Yeah, good morning. So, Anisha, actually, Manappuram was a good time. We entered when, it came below that sub 100 level for a short period, when there were allegations of some wrongdoing by the, some management issues, which were actually denied. There was no issue on that. It was just hyperly blown and there was an investigation. And from there, it has paid rich. I still think on a price to book, it is one of the cheapest gold lending stocks. 2% is what they make on gold loan. And now if you see, they've broadened their portfolio. So when they get assessed to only one asset class, which has one mark to market. And on top of that, if you diversify your portfolio, then your NIMs are going to rise in tandem. I think definitely this stock is a undervalued stock, and I would not rule out even 200 rupees coming in the next 1 year. I definitely think on any decline, or even now, given the numbers, given the pre-provisioning operating profit, this stock should be definitely re-rated on the back of numbers and on the back of the changing environment of their book.
Okay, what's the outlook when it comes to Jubilant FoodWorks? Because in their management meet, they did talk about how they are likely to double down on the growth in Domino's, and they are as well talking about maybe mid-single digits for the same-store sales growth. Are you looking at this stock glass half full or empty?
So we have avoided Jubilant on the back that the valuation was too stretched. We will have a relook on the management, but we put money in Devyani International. We think they are gaining more market share, particularly on the Costa Coffee. Their other brands and Kentucky's new mix is doing extremely well. And we think that Devyani at 180 offers a very, very good opportunity. That is one QSR stock, which we think is, undervalued as per the rest of the peer groups. And we would actually advocate putting money into that. That actually for us can be a doubler in the next 2 years.
Okay, so from that QSR space, Devyani has been one bet that Mr. Bhasin has been very positive on. But what about the entire pharma space? While, the numbers from Narayana Healthcare were good, even Wockhardt look impressive because the margins have improved quite a bit. Natco was a bit subdued. What's your view in terms of which are the stocks which are best placed within the pharma pack?
So you'll have to take a basket of them. I thought Glenmark numbers and the disclosure from the management was very positive in the sense they have a one-time FX loss. Their new brands in what they've invested is showing color. Their geographical bent on North America is yielding positive results. And mind you, 9% of their turnover goes into R&D, which is being overlooked. I think this fall in Glenmark should be an opportunity to buy. If this quarter was a one-off because of one or two items, I think Glenmark is one of the stocks which is very, very strong on their portfolio of diversion of a lot of other businesses which they have, and they've consolidated their businesses very well on the pharma side. Lupin is the other one which we are very, very positive. As a disclosure, Lupin is in our portfolio along with Sun. And we think that basket, Anisha, the best thing to play over here is SBI Mutual Pharma Fund or a Nippon Mutual Pharma Fund. Because consolidated, if you bought just the mutual fund, your NAV will do well rather than individual stocks, because that is the domain of the fund manager and the changing environment on a lot of the US FDA. But I would give Glenmark a relook, and we'll wait for the management commentary. But I think this fall was overdone. This stock can again rally back to 850, 880.
All right, stay on with us. Let's move right on. And there seems to be a little bit of caution when it comes to the global macros, but investors are very optimistic still about the interest rate situation. That's the finding from the BofA Global Fund Manager Survey. Let's find out what exactly the key takeaways are. Vinny joins in with the updates. And Vinny, seems like investors are reducing cash holdings to a 2-year low. What are the other highlights?
Absolutely. So firstly, obviously, like you were mentioning as well, investors remain quite cautious overall on the macro data points. They're turning bullish to the interest rate as well. Other than that, what BofA is highlighting is in terms of the playbook for 2024 is the soft landing, lower rates, weaker US dollar, as well as large cap tech, as well as pharma bull. That is going to be something that will be continuing. Everyone is in the global fund is avoiding China and leveraging as well. Overall, other than that, investors are cutting cash from 5.3% to 4.7%, which is at a 2-year low. Other highlights are to move to the biggest bond overweight since March of 2009 and flip to the first equity overweight since April 2022. That's the trend that seems like it's shaping up. Investors expect a weaker global growth, but 74% predict that soft or no landing at all. Let's keep an eye on that data point as well as CIOs tell CEOs to improve the balance sheet rather than increase the capex or stock buybacks. These are the key highlights that are coming in from this Global Fund Manager Survey by BofA.
Okay, point taken. So that's the latest coming in as to what the fund managers are talking to with BofA. But in the meantime, let's take a look at Dabur as well and how the stock price has really moved. It seems like that some of the Berman family members have been named in the betting app FIR. However, the family has actually issued a statement clarifying their position as well. We, of course, had an exclusive chat with Mohit Burman as well of the group, when he talked about this case as well as what is lined up for the entire group. But while we will play that conversation for you very shortly, and the visual should come up for you on the screen, Mr. Bhasin, in the meantime, give me your view on some of these stocks, maybe an Everready, a Religare, which is the candidate of hostile takeover, and of course, Dabur itself.
So Anisha, I think the controversy will be, settled by whatever the explanation and so on. I cannot comment on that because I am not privy to what the exact status is. These type of rumor mongerings happen. Dabur is a very, very strong brand. And I think the Everready stock which they took had a huge upside, given that there was the original promoter had defaulted, but the business was very strong. We still think the Religare brand is extremely positive, and that could play out well. But I think we will have to wait for more of this, uncanny rumor mongering which is going on for that to play out. So I would reserve my comments. I still think Dabur is one of the best FMCG players, and they've played out. Their portfolio has done extremely well. And if you own that stock, please stay with it. And we'll wait for more color coming on this whole episode.
Okay. A quick take then, Sanjeev, on Indiabulls Housing. You've got an inline set of numbers. Brokerages are a little bit underweight, and then there's Grasim as well, where you also had the overall volume growth, or EBITDA rather, coming in pretty much below what the street was penciling in. How are you looking at these two result candidates?
No, so we have a positive rating on Grasim. Any decline is a buying opportunity. The whole portfolio of VSF and PFI are doing extremely well. Their local businesses are expanding, and we know that the specialty chemical commodities are doing extremely well, and that's the next outlook. It is also the holding company of Vodafone and of Ultratech that in some of parts gives it a valuation edge. We would avoid India Bull Housing. We would rather go with Bajaj Finance. I think quietly they've raised 9,000 crore, which gives them a lending book of 50,000 crore over the next 1 year. And at this time, when rates are close to 8-9% on their NIMs, they would be the ones who would be laughing their way to the bank. The promoters themselves have issued 15% and participated in this buyback by issuing warrants at 7670, which is at almost a 5% premium. And I think that we have to identify at 19,700 where there is value and where the downsides are limited. So I think this downside was an opportunity because of the QIP. Given the prospect of raising 9,000 crore, which is the highest an NBFC has raised, I would say that Bajaj Finance is something which you can safely put your money for a 15% upside over the next 6 months.
15% upside on Bajaj Finance over the course of next 6 months. But Naresh, what's your view on IndusInd Bank? Of course, that will see the reaction of the MSCI inclusion today. Post that, Apmu, what should one do? And the other curious case is BHEL. The company posted a very weak set of numbers. It did not look good even on the operational front. But on the charts, this stock is making a bit of a breakout.
So starting off with IndusInd Bank, the stock looks very promising. Over the last few months, it has been a relative outperformer to the bank Nifty, and it gave a breakout above the 1470 mark. Post that, it has been a slow and steady move to 1510. Now, if you go back towards the highs back in 2018, it was 2015. Going into COVID, just before that, it had made a top around that 1550, 1600 mark. So my expectation is a target price of 1600, 1650 in the short term. Closer to 1500, 1520 remains a buy zone with a short-term target price of 1650. On the long term, it could again go back all the way towards that 2000 mark, which is an all-time high made in 2018. So clearly, it's a new leader in the banking space. Now, going to BHEL, the stock has been a major trend change when it started breaking about that 80-90 mark, made that huge move towards 145 odd levels, corrected back to 115. And now was making a range between 115 to 135. For the last 2 months, 135 was a resistance. Yesterday, it broke out above those levels with the highest volume in the last 2 months. So clearly, the price action suggests we are starting another move up. Pause could be at 150, and if we sustain above 150 mark, it opens up a target price of almost again back to 180, 200, which was the price back in 2014-15. So structurally, a long-term trend change, rounding bottom, which happened and a breakout happened at 80-90. Would continue to surprise on the upside, looking at a buy at even current levels.
It's very interesting. If I just look at what would be called as the pound of stocks which you don't want to buy, whether it was Suzlon, Vodafone, JP Associates, it's like saying that things have really reversed. 76% for Vodafone. I mean, nobody likes it, excepting Sanjeev Bhasin. But the stock's done well. JP Associates, again, nobody likes it excepting Sanjeev Bhasin, 93%. Suzlon, hello. Suzlon has gone up by 2.6%. And this one, I guess, everybody likes now. But beginning of the year, nobody liked it. Now, why am I bringing these three stocks up? Well, there is a change in terms of the debt profile. Suzlon, they've got capital infusion. Some smart investors have moved in. JP Associates, I read last evening that they are looking at changing their debt profile in terms of their, the huge debt which they've got on the balance sheet from ICICI Bank. Vodafone, there is a talk of a capital infusion. The company was rescued in the middle of the COVID crisis by Government of India when the ownership changed hands. So, Bhasin Saab, which is the next big one now?
Well, Nikunj, these are very hard trying ideas. You have to sit through a lot of pain when they don't perform. But like I said, there is value in the eye of the beholder. Right now, if I could find some, I'll definitely get back to you. But I still think that Vodafone is bound to be re-rated. And I gave you the reasoning for that. JP, there is positive news. They've converted 7% equity for ICICI. The NCLT hearing is on 30th November, which will be another positive once that is decided and it comes out of that. but now we cannot say because the stocks have more than doubled from where they are. I would now stick to bigger large cap names. Like I said, Bajaj Finance is something I'm very, very positive on. And I would, put my money in Bajaj Finance, Reliance, ICICI Bank for making a comeback. I will definitely say in that power space, like, you've seen the re-rating for power transformers, where BHEL has reached. Go with the largest private player, Tata Power. You cannot be wrong. I can vouch for it. 350 on Tata Power or a new high is coming, and it may be 6 months, it may be 9 months, it may be 3 months, but that is one stock which you must own in your portfolio.
Okay, Mr. Bhasin, on that note, we let you go. Appreciate you making time and speaking with us. Dipan Mehta also joins us on the show. And Dipan, why not talk about that Tata Group yet again, but this time talk about Tata Tech, the IPO that everybody is awaiting. Your sense as to how the valuations stack up versus the rest of the peer. I know we don't have the official number in terms of the range of the IPO price, but as we discussed, it won't be much away from that October price discovery wherein the equity valuation was close to 16,300 crores.
Yeah, good morning and thank you for having me on your show. I wish I had also worn my India t-shirt. Really nice gesture on your part, both you and Nikunj. So I think Tata Technology is going to be a fabulous IPO, and certainly it's going to be oversubscribed many fold, and therefore allocations are expected to be minimal. I'm not aware of what the valuation will be, but I suspect it will be around about the peer group valuation of mid-cap companies, 30-40 times, maybe trading 12 months. And the most interesting part, what I read about Tata Technologies, is that even the last 3 years, 2-3 years also, they have made significant progress. And the last 9 months, which are very challenging for the IT industry, at that point of time also, their top line, bottom line was quite impressive. I don't remember the numbers exactly. So clearly it's a class apart. And, we always like these software companies which are focused on the automobile sector, like KPIT, for one, Tata Elxsi, have both these companies that delivered fabulous returns. And Tata Technologies is one more company which is in the similar vertical. So I'm sure there'll be great appetite and fabulous listing. Maybe, you could look at buying the stock 6 to 12 months down the line when the volatility has stabilized and there's a clearer picture about its future prospects.
Dipan, now Tata Group company, automobile, it is a beneficiary of what is happening in the automobile sector and a beneficiary because they will be implementing AI, benefiting from AI rather than getting disrupted from AI. The point is, do you buy it after the listing or do you just wait it out like you said? Because this is going to be one of those gangbuster listings. I mean, we've seen that some good companies, when they've gone public, they never gave you a chance, post-listing, like DMart for that matter.
That's right, Nikunj. From a retail investor's perspective, I think they should try and go for the IPO definitely. And if you get allotment, then it's going to be like a lottery. And thereafter, I think I would say 3 to 6 months after listing, you'll get a chance. Everything doesn't, on listing, there's a lot of momentum and there's a lot of fireworks and stocks valuation generally are elevated. But, a few months down the line, 2-3 months down the line, things tend to settle down. Let us see one quarterly result also, how it turns out. And then I think if you buy the company, in my experience, at least there's some margin of safety. Another strategy could be to buy some small quantity on listing and then try and, do like an SIP, buy small quantity over the next 3-4 months or so. And that also you could have a decent holding with an attractive average purchase price as well.
Every day the headlines with respect to what's going on in the world of tech, be it deep fake, AI, etc. It's just, a lot to actually keep up with. But there are a lot of companies that are managing to adapt to it quite well. How critical do you think it is for some of these large cap, mid cap, traditional IT plays to actually adapt and leverage and capitalize on all of this new technology to stay ahead of the game within the space?
So I think that AI is going to be a great opportunity for the Indian IT industry, whether it is of the scale of Y2K or internet or remote infra management, some of the other tech trends which have really taken the IT industry to new high. That needs to be seen, but certainly it's an opportunity for a lot of IT companies. And with the way the numbers have come from US inflation last night, and the way the Dow has recovered, I'm pretty certain that you may see a good amount of outperformance coming in from the software companies from today itself. I think ADRs of all these software companies were around about 2.5% higher. And if tech spending starts to recover in US, which it is likely to be so, then these companies certainly will get a lot of traction from investors. There's valuation comfort over there. And once spending picks up, I think a lot of it will be in this AI and new generation technologies. And Indian companies have been fantastic at transforming themselves from one tech wave to another. And certainly they will absorb this new technology pretty well and make new offerings for their customers on this tech platform as well. So very positive on software companies. So far the view had been tepid, but looking at the way US inflation has turned out, I think this could be a turnaround point.
The other big trend which is at play is that look at the comeback in a Vodafone, Suzlon, or for that matter even we've seen JP Associates. Now we may talk about these are companies which in a sense are not the companies which offer a very strong there's a lot of bitter aftertaste after what happened in the last bull market. But some of the companies are trying to genuinely come back. They're reducing their debt, whether it is Suzlon or JP, even for that matter Vodafone. How should one look into them now? Because there is a case of debt reduction which is there in some of the big corporates now.
See, I think Suzlon clearly is on a very solid path, and that's a lot to do with the industry that it is operating in as well. Where I think after many disruptions and after many changes in government policies, now we are seeing serious investments taking place. So the likes of Suzlon, Inox Wind, I think the way the order books are bulging, they are in for good times per se. And anyway, the capex cycle also is picking up, so that benefits them. But when it comes to JP Associates and Vodafone, I'd like to be a bit circumspect because the underlying industry in which they're operating in, there are challenges over there, especially telecom. I think even Vodafone, even if it does get the funding, it still has to deal with massive competition from Reliance Jio and from Vodafone and from Bharti Airtel. And they have to make massive investments in 5G where they are clearly left behind in this particular race. So from that point of view, from a business perspective, although they may get the funding and the debt level may come down, I'm not certain of their profitability prospects going ahead. So that's an avoid for me. Same with JP Associates as well. I've lost touch as to what is still left in JP Associates and what is not left. And, what kind of business that actually they are, going to try and grow. But my sense is that, even if they get the funding, I'm not sure that they'll be able to scale up the business as well as confident as I am about Suzlon, which also has been a classic turnarounds company.
Dipen, do you own it?
Not any of these two companies, but yes, Suzlon, we have some trading positions as a measure of disclosure.
I'm going to change gears and talk about two banks which have done rather well in the last 1 month. One is IndusInd Bank and second is Axis Bank. And Kunal, I think we've discussed IndusInd Bank time and again. Is it looking, the move in IndusInd Bank this year I think has been class apart.
Well, yes, Nikunj, it's been class apart. The stock has been more sturdy, very strong, even in the last 2-3 months specifically, at a point when the bank Nifty has grossly been extremely divergent in terms of the internals, where the private sector banking names like HDFC Bank, ICICI Bank, Kotak Bank, etc., these stocks have been struggling. They are closer to their respective swing lows. I think if I'm not wrong, Kotak as well as HDFC Bank had been trading below their 200 moving averages consistently over the last couple of months. IndusInd Bank, on the other hand, in the last 2-3 months as well as over the last 6 months, has not even come closer to its 200 moving average, let alone breaking below this critical key support. And on the other hand, the stock is now perched back above that 1500 mark, which is a multi-month high for IndusInd Bank. So that itself tells you the degree of outperformance, stability, sturdiness of the stock price. I think that's what the markets are looking out for. That if stocks like IndusInd Bank and to a larger extent maybe even Axis Bank, if these stocks they continue to move up higher, and the larger cap names, the heavyweight names like HDFC Bank, etc., if they stop falling, that itself could probably be positive for the banking index. So would be more bullish towards the likes of IndusInd Bank and Axis Bank as compared to the other three names.
Okay, in fact, on the pharma space as well, Kunal, wanted your take because today some of these stocks will be in focus on account of the export data which is out. There's a bit of a sharp drop on a month-on-month basis when it comes to Divi's Lab at a 3% drop, a 33% drop at that. You also have Gland Pharma, which has seen a slip of 14%. Ipca Labs, Loris Labs, wherein the drop has been anywhere between 20 to 25%. Within the pharma pack, Kunal, if you had to take a bet, which stock comes to mind?
See, I think out of the names which you mentioned, Ipca Labs actually something which is popping up on the radar in terms of a breakout. The stock has performed quite well. I remember, I think, tracking the stock when it was almost at 750, 55, 4-5 months back, when there was a flag pattern breakout, the stock coming above the 200 DMA. One of the more recent moves from the pharma pack, which had given a breakout move at that point of time. Then the stock steadily went into a pattern of higher highs and higher lows, breaking past about 1,000 levels. Glenmark, on the other hand, for example, that's a stock which is actually now showing signs of a consolidation or a top out formation over here. So I think the stock has been struggling to break past about this 800 to 900 band. It's been meandering at this zone for the last 1.5 odd months, and I believe that the stock is now starting to show signs of some bit of downtrend for itself, which means that the stock is going through a patch of correction, and this corrective wave could last for at least another 10% on the downside for Glenmark Pharma. DV Slab has been a bit of a rather a huge underperformer as compared to many of the other pharma stocks. I think except for that rally which started off from the month of February to March or April for DV Slab, when the stock had rallied some 15-20%. I think post that it's again been a big underperformer. Even the last 1 month specifically, from that 18,800 lows, pharma index and the pharma stocks had actually done pretty well, but I think DV Slab had been an underperformer. In this aspect, Lupin, Cipla, Sun Pharma, I think these are the three names which have outperformed, so it's best to concentrate there.
Dipan, what about the entire space when it comes to the likes of QSR? Because we have seen a big kind of drop, at least this year, in terms of the SSSG. They were not strong. The benefit of the raw material prices hasn't come through yet. Would you buy any of the QSR names, whether a Jubilant? Because today BofA also actually came out with a note on Jubilant, talking about it positively.
So I think if you have a contrarian streak in your investing strategy, then certainly QSR companies meet that criteria. They're outstanding businesses, great runway for growth, and where we are seeing changing tastes and increased spending on entertainment, and as well as these food delivery aggregators also benefiting sales of these companies. So from a long-term fundamental basis, these companies have got great prospects, but there are transient factors because of which these companies have reported very disappointing numbers for the September quarter. Same sales stores growth rates have certainly stagnated, and some of the companies also have cut their target for setting up new stores as well, or new restaurants. So it's in a bit of a problem situation, and at this point of time, I think if you have a longer term view, 3 to 5 years or so, then these companies certainly can give good returns over a longer period of time. So from that point of view, I'm positive. Having said that, I think from an investment perspective, if you're already holding the stock, then I think these are not the levels to sell, because we've seen recent correction also in them. But from a longer term perspective, I'm pretty certain that these companies can deliver exceptional returns going ahead, and you could perhaps buy at every decline rather than just chasing these stocks at this point of time.
Now, as we walk into trade this morning, what are we working with? We are working with a monster gap upstart. 250 points, unheard of, suddenly after you go for a holiday and then nothing big in terms of a news flow which has changed. So if the GIFT Nifty is anything to go by, please ignore the pre-open rates, they will adjust. There is no way markets would be down. The point is, how do you approach today's gap upstart? I think first, before we discuss that, we can show an excerpt of our conversation with the management of Dabur, where Ajay actually had a chat with Mohit Barban on variety of issues and whole host of points which in a sense currently have plagued Religare and the open offer there.
So we are having this very special interaction with Mohit Barman of Dabur, who has this time made us wait along. Otherwise, he usually speaks with us once a year, but he's been traveling a lot and, of course, handling a lot of issues at hand. So Mohit, thank you very much for your time.
Thank you for being here.
I was really looking forward for this interaction. But let's start with the main point at hand, the news which has just come in. It has surprised a lot. Mohit Barman and Gaurav Barman's name in FIR on this Mahadevi betting app, it is quite surprising.
So this is all malicious. There's no facts to it. We vehemently deny it, and we've issued total denial of any of this.
But I was checking out the press release which you put out. First of all, you have never met them. Nothing to do with.
I've never. I don't know any of these gentlemen. I've never met them. I've never placed a bet in my life. So there's no question of any This is a totally maligned, being set out by the, people who are now resisting our takeover of the company.
All right, let's come to that. Yeah. So why do you think anybody would resist your taking over? And this is Religare Enterprises, a different company. This, your name and Gaurav's name cropping up in Mahadevi betting app issue in FIR, the two separate things. You think they are joined?
Absolutely. Somewhere? I mean, this is a way of showing that trying to make us weak on the fit and proper test. But after being in business for 140 years, I mean, in being in businesses that require as SEBI, IRD approval, we were the first ones to get an insurance license. I've been a chairman of an insurance company for 20 years. We have a joint venture with 2 public sector banks and a Japanese company. So all these regulatory bodies have already passed our fit and proper test. So where's the question of being questioned on that now?
Okay. Mohit, let's talk about Religare Enterprise. Yeah. You first bought in from the market and then you thought of increasing your
No, we never bought from the market. Okay. I just want to correct that.
Sure.
Each time we have been there as white knights for the company, and both times we have put money in the pref.
Oh yes,
yeah.
You were part of
the first time in 2018 we put money in the pref before even the existing chairperson was there. And second time also we put in the pref. We led the pref. I can say with a lot of certainty that a lot of other investors came in because we led the pref to sort out the OTS.
Sure.
It's only it is only on the last purchase which we bought from SSG, a very reputable sort of a credit fund.
Yeah, which happened, the block deal which had really happened, and then launched the open offer.
Yes.
So what is your thought? Why do you think the current management is resisting taking over the company controlled by you?
Well, you will have to ask them, because I mean, when we made the open offer, they sent a letter to the stock exchange in welcoming us.
Yes.
And in that letter saying that they will work with us, for a sort of a simple and the best sort of way to move the business, and make it a seamless sort of transition. And then suddenly 2 days later, as soon as we voted the chairperson in, it all went topsy-turvy.
Because I remember speaking to the current management right after this news actually came in, and the idea was that we'll welcome all the shareholders, large shareholders, all of that. So what is the current dialogue you've had with them, apart from what we are reading? Have you had a dialogue with the current management at all?
No, the last dialogue was when we met them just before the open offer. We met the chairperson. She welcomed us. For a few days before, we had told her that we were making an open offer. And then after we voted her back in, then she's gone. She's saying that first her allegation was that the offer we made is a very low ball offer. Yeah. But she and the management sold their shares at that price. So how is it low if you're selling your shares?
And also the price of the open offer. Is a SEBI formula, right? So you don't have any control.
No, and our SEBI formula, we've actually, our price is higher than the SEBI formula. The SEBI formula came to 221 or 222, and we made our offer at 235. So where's the question of making a low ball offer? And also, we think we made a fair offer. Leave it to the shareholders to decide on whether they want to try put their shares in or not. There's no, I mean, it's.
So how do you rate the way the company is being run right now? Where are the areas of potential value locking?
Well, the business. I mean, it has four businesses. Of course, the flagship is the health insurance business. And the other three business, it's financial services. You require capital to build these businesses up. The business, the company does not have any capital left. So, I mean, I'm surprised that we're being resisted. As at the end of the day, we will provide capital and the right strategic direction for the business to get to the next level.
So, how do you rate the capital allocation policies at the company? Because I understand that there are certain sections which are talking about the way companies being run in terms of the money be spent and all of that. Yeah. How do you analyze all of that issues?
No, I think I think the analysis has to be done by people like you, because as far as we're concerned, we're only highlighting what's happening in the company as it. I mean, there's Religare at the end of the day is a holding company. It doesn't have any income, but the expenses there are totally disproportionate. So you have to analyze on where all the money is going from there.
So that's the Berman family talking about a whole host of issues, candidly talking about that entire FIR, how they think it's malicious and it's planned against the entire Religare, takeover as well. So a lot of key takeaways. And of course, we'll play out snippets of that conversations all throughout the day as well. But Dipan, on that note, we'll let you go. Appreciate waiting by and speaking with EG now today. Time to get some mid-cap strategies from our charters now. Nuresh, you go first.
So that's a buy on CSC Limited. We are seeing a strong trend across the power names. We've seen Torrent Power make a new 52-week high and an all-time high. CESC is setting up for almost a 2-year breakout now. Multiple times it has corrected from 95 odd levels. Now a flag breakout on card above 90 to 95 levels. So preempting that move here, expecting a move towards 110 in the short term. Stop loss at 87.
Okay, what about you, Kunal? Which are the top mid-cap ideas?
So there'll be a buy on BHEL. The stock, on Monday's session gave a breakout. It was a breakout of an inverted head and shoulder pattern for the stock price. So would suggest a buy with 150 as the target and stop us at 130.
All right, let's move right on and track some of the other top headlines then across the world. And it's been over a month into the Israel-Hamas war. More than 2/3 of Gaza's population has been displaced. Over 11,300 Palestinians have been killed, and Israel has admitted to carrying out the operations against Hamas at the Al-Shifa hospital, while Hamas has denied that it is using the hospital as command centers. Meantime, the Chinese Premier Xi Jinping is in the US to attend the annual summit of the Asia-Pacific Economic Cooperation Forum. This is Jinping's visit to the US in 6 years. His first visit in the last 6 years. He's expected to meet the US President Joe Biden in San Francisco. Meantime, the US House of Representatives passed a temporary stopgap spending bill to avert a government shutdown. The bill would extend to government funding through mid-January, and it will be taken up in the Senate next.
Meantime, Northeast monsoon continues to lash across Tamil Nadu. All schools and colleges to remain shut in Chennai and Puducherry amid the incessant downpour today. The IMD has also issued a yellow alert for 8 districts. Meantime, there is no improvement as far as the Delhi air quality is concerned, as AQI remain in the severe category. The National Capital Region and the neighbouring areas continue to be engulfed in pollution and smog, even as residents continue to defy the cracker ban.
Lots to watch out for by way of individual stocks. Let's add one more to that list. Kaynes Technology. It's the stock that's got some cover around it. It's in focus because we understand that the semiconductor business is expected to raise capital. What else is going to keep the stock in the spotlight? Let's get in Sharad with all the details. Sharad.
Well, yes, in focus we are having Kaynes Tech, and the buzz in the street is that the capital fundraising, which is already announced by the company, this is expected to come in for the semiconductor business. Now, the company itself has already signed an MOU for its OSAT business, which is the semiconductor business, and already the agreements are in place with Telangana and Karnataka. And apart from this, the board meeting expected to happen on November 18th for this overall capital fundraise. Now, analysts are also quite bullish on the stock, especially because of the first mover advantage coming in for Kaynes Technology for the semiconductor chip ecosystem. Also importantly, important order inflows are also expected from the print control assembly segment as well for the company.
Thanks, Shad, for that. But pre-open rates just settling in, and let's take stock of Manappuram. That's showing higher by 8 to 10%. You also have Narayana Heart Hospital as well as Natco Pharma, Suzlon as some of the names which are going to react positively. It seems at least that is what the pre-open rates are suggesting. But time now to also listen in to the verdict coming in from our managing editor Nikunj Dalmia in this editor's take.
The benchmark valuation has been established by that private deal which was done. So I don't think the IPO is going to be way off because the benchmark valuation was just done like a couple of weeks ago. Now, can Tatas manage the balance sheet of Tata Motors without this IPO? Of course they can. So then why are they listing? Well, the reason why they're listing is because this in a sense is one of those niche companies which has potential to really make it big considering the kind of profile they are in. I think it's one of those issues where you actually will see, this really could be the season listing of the year. Looking at the size, which is not like Magnus Opus or not very large or colossal, it's not going to be an issue where everybody will get IPO allocation. So if you just get lucky in terms of an IPO allocation and looking at the benchmark of where the pricing has been done and considering the Tatas are likely to leave a lot of money on the table, one would argue and say that this, if you get in the IPO market, you don't want to pay for that IPO pop, even if the listing is 50-60% higher. You want to just hold it. Let the Tatas do their magic. Let the company evolve. Then the right space, right brand, and the businesses which they are representing, they can really they can be really scaled up. This is not a typical IT service company, which is where you would say, okay, there is an AI disruption happening. This is an AI beneficiary. This is not a company which actually will be disrupting because their business will get disrupted because of AI. They would be benefiting because of AI. This is the other way around. So these are companies where you say, okay, I will apply for the IPO. If I get lucky, I may just hold on to it.
That's the editor's radar on Tata Tech and the IPO. But let's move right on and find out what the index calls are. Just a couple of minutes for markets to open, and it looks like it's a consensus hold call on the Nifty. Do remember, we've got a steady handover as well coming in from the US markets. So the Moodometer says hold call on the Nifty index. Moving on to the Nifty Bank, and Kunal believes that this is a good opportunity to buy. Naresh though says that it's a hold call on the Nifty Bank.
Naresh, the risk-reward ratio after a 200-point gap up, is that missing? I mean, because we are in for a 200-point gap up.
So that is the problem. So when you want to say 900 points from the low, it becomes difficult to take a fresh buy at current levels. It's a time to ride. And at the same time, what we can look out for is stock-specific approach. And stock-specific has worked out fine. Even though the indices have not made a new all-time high, there are way too many stocks making new all-time highs in the small cap, in the mid cap, as well as in the large cap space. So for now, at some point of time closer to 20,000, one should be looking at booking some profits. So for now, it's a trailing stop loss at 19,500 and ride on to this move.
Kunal, did a question.
Yeah, so I think from an index perspective, the risk reward may not be fruitful for the Nifty, but I think for the Bank Nifty, I would expect a breakout. I think that's where I would probably, give more impetus towards Bank Nifty, expecting that this could be a start of a breakout move, something which has already happened for the Nifty.
30 seconds to go. Well, 2 o'clock the match starts. So it's going to be a match. It could be a market which will be between 9 to 2 and then 2 to 3:30. Let's see how actually it moves. But yeah, I mean, it's an extension of Diwali, guys. The setup, I think, is absolutely admirable. From where we were versus where we are, both in terms of the positioning. Globally, I think is the more important one. It's not so much local. I think it's globally. When the first rates after a one-day break, indeed, it's a good start for a new year. And the first rates are 171 points up for the Nifty. Breadth is touch wood. Absolutely amazing. 1:15 advance to decline ratio. It's like a rara move in the market in terms of the market breadth and in terms of the risk reward ratio. I mean, everybody talked about, okay, bubble in the small cap stocks, but that's where all the action is. We can endlessly get into small cap bubble, but you should also respect the market action, which is that markets can remain extended for an extended period of time, which is what it is now. You've got some newsmakers now. Let's address some newsmakers now. And right on the top of the heap really is going to be IndusInd Bank. Then you've got Manappuram. Then you look at Jubilant. Manappuram Finance has a hit out of the park, both in terms of the numbers and where the market opinion now is. I will not be surprised. That's IndusInd Bank for you. Let's look at Manappuram Finance. Circuit up, I think. It's an FNO. No, it's not circuit up. 152, 11 rupees higher now. Now, we forgot to speak about it, but what has happened to Diwali sales? The real impact of that on jewelry stocks, retailers, autos, consumer durable, consumer discretionary. That theme, I think, is very evident in terms of where the things are. So jewelry stocks, retail stocks, car stocks, urban FMCG, that entire space now today could be the real, trade of the day or real, the market focus of the day at least.
Yeah, but the trade of the day also seems to be in IT. That global rally that we had seen is having an impact back home as well. So you have the IT stocks which are actually opening up well. Case in point in Infosys, LTI Mindtree as well. Real estate stocks continue to power ahead. So Phoenix Limited, Brigade, as well as Oberoi Realty, these are some of the stocks that deserve mention. Talking about individual names now, result reaction on a Trident, which is higher by 7%. The profitability had become 2.5x, I believe, and that's the reason that stock is up by 7%. Narayana Healthcare is the other one. You also have Natco Pharma reacting positively to its earnings. And you can also look at a few other buzzes as well, the likes of Suzlon, Hindalco, RVNL as the top gainers. On the losing side, however, NMDC disappointed a bit with its earnings, and Dabur too is seeing a bit of a sentiment downtick on account of that entire cloud which is there on the entire Burman family for now. So that stock is down about 1.4%. But if you look at the broader markets, it's the small cap stocks which are actually buzzing. So Reliance Power is actually up. JP Associates is reacting to that deal that it has with ICICI Bank as well. So small cap names are also having a good day. But overall, a very strong start to the trading session, 19,600 Avan.
Absolutely, and like you said, it's those small cap names. By the way, 19,600 is the print that we're on the Nifty. So Manappuram, Suzlon, JB Chemicals, IRB Infra, Sobha, Birla Soft. You're seeing a lot of traction and action really within the broader universe. A lot of those banking names as well are holding out quite well. So Kunal, let's